Another shock development in a dramatic U.S. presidential campaign as the FBI investigates a second apparent assassination attempt on Donald Trump. The Fed will begin a crucial pivot this week, cutting rates for the first time in more than 4 years as it seeks a rare soft landing for the U.S. economy. And the Fed decision sets off 36-hour monetary roller coaster ending with the BOJ on Friday. Meanwhile, the yen strengthens beyond $140 for the first time in over a year. So first thing is first, the market's definitely looking ahead to that BOJ decision. Ahead of that, looking at the Fed, and there is pretty much what's priced in is, of course, a cut, but we don't know by how much. Is it 25? Is it 50? We'll have a full roundup of the main top news and some great analysis on that. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, it's a big week for central banks and the markets. We'll discuss that shortly with Joyce Chang from JP Morgan. But let's begin with the latest major development in U.S. politics. And former President Donald Trump is said to be safe and unharmed after an apparent second assassination attempt. Now, it's believed that the Secret Service detail opened fire on a man who was wielding an assault rifle at Trump's West Palm Beach golf course in Florida. So let's get more on all of this with our Bloomberg EMEA news director, Ross Matheson. Ross, I mean, this is an extraordinary set of events because it comes only 2 months after there was that first assassination attempt where his ear was clipped. What does it tell us about the state of U.S. politics right now?
Well, it's interesting because this obviously was perhaps less of an immediate threat to Donald Trump than that first one we actually was clipped in the ear. But still, it shows you just the climate around the U.S. election campaign and how febrile it really is just a couple of weeks out, really, at this point, from the election. And what are we going to see in the remaining weeks of the campaign? It shows you an election that's extremely tight. The polls are very, very close within the margin of error in a country where voters are extremely polarised. And you can see that in the way the campaigns have rolled out. You can see the way that they're fighting over a couple of key swing states in the US Midwest, in particular, capturing just a small number of voters who could have the ultimate say in who's going to be the new US president come next year. And so what you've got is a climate of disinformation in campaigning around social media, people feeding off that. Questions obviously around security and access to a former US president. But obviously the big question here really is, what does this do potentially for Donald Trump in the final weeks of the campaign? Obviously he's been struggling in the past few days. There's been, talk in his inner circle that his campaign is teetering a bit after that election debate and some of the comments he's making. Does this give him a reset?
So when do we know? I guess it's too soon for the polls now. Does it take a couple of days to settle?
Well, it might give his base, some fresh energy because, again, what he wants to do is shift the narrative away from the past week or two and onto different things. And does that, give that fresh momentum back? Does it show up in polls? But throughout, for months and months, the polls have really been very much within the margin of error. One will be up for a week or two and then the other will be up for a week or two. But no one's getting that clear water, again, particularly around those swing state voters, the sense that they're going to pull those voters out on election day. They have to draw them out first and they're going to draw them out to vote for them. And the question is, does this just play again to Donald Trump's base? Those people are established voters for him. Do they get fresh momentum? But does it change anything when it comes to that core group of swing state voters and pull them out on election day? And that remains to be seen.
Ross, really quickly, what do we know about the person that attempted this and the security response?
We know he's a 58-year-old man. We know that he's now in custody. He was taken, he was obviously an advanced security detail, spotted him in the bushes. We don't know a lot about him. We know he's got a bit of a criminal history. We know on social media he's got very strong views, particularly about the war in Ukraine, about supporting Ukraine, volunteering to go there and fight himself for Ukraine. We don't know how that played into his thinking. He might have been a Trump supporter, it seems, at one point in time. He may have also been a Democrat donor at one point in time. Very little we know at this point around his motivation, but obviously he's in custody. We might find out more soon.
Ross, thank you so much, as always, for the terrific briefing on what happened overnight. Ross Matheson there, Bloomberg Bloomberg's EMEA News Director. Now, we're also joined by Joyce Chang, Chair of Global Research at JP Morgan. Joyce, first of all, welcome to London. I know that this is not something that's playing out in the markets, but it feels like all of this division, this chaotic 2024 campaign, at the margin must have an impact on investor behavior.
I think right now everybody is still thinking that they're going to be a divided Congress. So the presidential race is too close to call here, and it's going to be decided at the margins. So I think there's a sense that it's too early to actually make a call on this based on what we're seeing. Another assassination attempt is still not a determinant of the elections. This is an election that's going to be decided at the margins, and it's going to depend a lot on turnout, with a couple of key demographics potentially making a real difference. Younger people, who are now 20% of the voting base, and also women. There are more women than men registered to vote in the United States. So there's still a lot that could play out before the elections. I don't think the market's willing to take a position on it because the presidential race is sort of dead even, but divided Congress is also something that market participants are talking a lot about.
And Joyce, of course, I mean, we understand that, the economy is top, one of the top issues for voters. Immigration has risen in importance. Have you already modeled what each, potential administration of the White House means for dollar strength, Fed independence, or is it too soon?
Well, what we have taken is what Trump has said about tariffs and modeled that. So if you actually take a look at just the 60% tariff that is proposed on China, we think that could raise inflation by more than 1%. 1.5% if you have a 10% universal tariff. And the way that we actually look at the impact on the dollar is if you think a 10% increase in tariffs, we think that that actually could mean about a 5% appreciation of the dollars. So there's a lot of the signals that are contradictory. The call for a weaker dollar, but still the proposals that point to us that you're going to have dollar appreciation.
The wild card is, of course, the trade war.
Yeah,
right?
Trade and immigration.
Really, is that impossible almost to figure out how aggressive? I mean, some of the proposals have been pretty intense, right? It's 100% tariffs if you don't play ball with the U.S.
Well, I think that a universal tariff is the big difference if you look at Trump's policy. I think that if it is a Harris administration, you're seeing more targeted tariffs on certain sectors that are strategically important. But the universal tariff is really sort of a different ballpark. And that's really, I think, what the market is focused on when they look at the differences in policy, just the use of tariffs that's been proposed in the Trump campaign.
So you also have a great chart actually looking back to since 1945 S&P returns and how positive they've been, except for some presidential term. And there are only 3 presidential terms. So we had negative returns for the S&P 500.
Well, yeah, no, and the point where there were negative returns, you had the global financial crisis, you had the dot-com bust. So it wasn't necessarily about the elections. And this is why I think the market is really saying, look, the initial election results, I don't know if you're going to see much of a market impact. It's really what plays out in 2025 when you see the types of policies that can be put into place. Is it more of the status quo, or do we actually just see on trade and immigration where the presidential executive order can really prevail, that there's a shift in policy?
So what does this all mean for the Fed? I think, your economists are one of the last ones out to hold for a 50 basis point rate cut from the Fed when it meets on Wednesday. Are you sticking with that?
Yeah, we're still sticking with the 50 basis point call, but it is a debate, internally within the broader marketplace. But honestly, I think the market is more focused on the growth story than whether it's 25 or 50 basis points. And I think that, the sense is, the recession risk, it could be out there later in 2025 in the second half of the year, but it's not imminent right now. So when I talk to investors, 25 versus 50 isn't so much the debate, but really just how does the U.S. growth story look?
But so why are you so confident on, I guess, this jumbo rate cut? And does it actually make a difference on growth?
Well, I think they have the scope to make this rate cut right now. And right now you are seeing all of the signs pointing to doing more would actually probably send the right signal. When you look at the labor market conditions, that the upside pressures on inflation are waning right now. And that when you actually just look at just how restrictive policy is, there's a scope to do 50 right now. But I don't think there's consensus yet. Yeah. So it could still be 25.
So do you think the Fed is actually behind the curve? Because I think you're expecting 50 September and then 25 in December.
I think there is a debate that the Fed is behind the curve, but I'm not as worried about the labor market as some, because the household surveys are not showing that there's a lot of consumer demand is still there, and there's not a lot of job shedding that's going on. So I think that debate is going on. It's whether the Fed's tone, no matter what, I think is going to be relatively dovish.
So you're expecting actually 50 September, 50 November, and then 25 in December.
Yeah, so no, we're calling that it is a cycle, but I think there's more concerns on looking into 2025, and that's in part because of the election results. Can you really have inflation come down further, given some of the policy proposals that are under discussion?
Joyce, do you have any worries about financial conditions then getting too loose?
We are seeing very strong demand in the credit markets now, and the things that cause a recession, feeding into financial conditions and credit markets, we're really not seeing signs of that. And frankly, when we look at things like the U.S. high-grade market, using 3.5% for treasuries at the end of the year, where we think spreads will be, we're looking at returns that are close to 9%. That's actually the best performance since 2019. So I'm not seeing that much worry about the financial conditions, and the consumer demand is still holding in well.
Joyce, thank you so much. Joyce Chang there, of course, from JP Morgan, stays with me, and we'll talk a little bit more, not only about China, but also the BOJ. Coming up, markets brace for, as we were saying, a big week of central bank decisions. Fed leading the way, but yen could also be very interesting on the back of BOJ. So more on what to expect next. And this is Bloomberg. Well, Bloomberg has learned that Intel has officially qualified for as much as $3.5 billion in federal grants to make semiconductors for the Pentagon. Now, the secretive program seeks to establish production for advanced chips with military and intelligence applications. You can see Intel pre-market gaining some 4.6%. And the bonds and yen both gaining today as traders prepare for a busy week of interest rate decisions. Well, we're back with Joyce Chang, Chair of Global Research at JP Morgan. Joyce, thank you so much for sticking around. When you look at, the BOJ is very interesting because it gave us like a bit of heart racing over the summer. Yeah. What are you expecting on Friday?
So I think they hold here, but they still signal that they're prepared to move before the end of the year. So we're looking at December for the next move. But I think the messaging is going to be clear that that's the intent that they're on, to bring policy rates to 1% by the end of the year. So I don't think there's going to be that much debate on the signal of where they're going, but we don't expect them to take action.
But if you look at the unwinding of the carry trade, you believe we're 70% there?
70 to 80% unwind, but there's the broader story in Japan, that it's the only central bank that is in hiking mode. There's the private consumption numbers that also look quite good out of Japan. So it's not just the carry trade on the yen that everyone's looking at. They're also looking at the curve trade. And also at the Japan equity market, particularly looking at financials and looking at some of the domestic trends that we're seeing on wage growth, on private consumption as well.
But just if you look at what happened early August, I don't know whether it was miscommunication, the market's getting it wrong. Could we have these volatile bouts like we had for a couple of days?
I think that the volatility is here to stay. The financial conditions, though, as we discussed earlier, are still pretty supportive, though. But you do have that a lot of people are still in the carry trade right now, that they think it's premature to take that trade off. A lot of it has unwound, but I think you will get these one-sided moves, because when you look at a lot of the multi-strategy funds right now, the way that they're positioned, everything sort of moves in tandem as well. Yeah. So I think that other asset classes, could get hit with some of this volatility as well. And that's one reason why we still think that some of the sort of more defensive plays make sense here.
What about China? Because if you look at China, we had a pretty terrible set of numbers, data points, again at the weekend.
Yeah, no, we've had to take our China forecast down, over the last couple of months, and we're still seeing the age-old problem in China, Francine, that the consumption numbers are just not coming back there. So there's more concern still about the overcapacity, but the other thing is just that the drop in commodity prices is also something where we're seeing that China had been stockpiling commodities. They've stopped some of that import as well. That's having an impact on other emerging markets developed countries right now.
So overall, it's still all about U.S. exceptionalism.
Well, U.S. exceptionalism seems like it's still afoot on many fronts. There is like growth, through the first half of this year has been, 1% above potential. Yeah. And there has also been disinflation in the U.S., which is at odds with the rest of the world, and a softening of the labor markets and wage inflation, which is also at odds with the rest of the world. And so I think that this is keeping a lot of the focus, even with the elections and questions about what will happen in 2025, still on the U.S. market.
I mean, the economy, and again, investors' actually appetite for understanding the economy is large, but a lot of the times they often have to readjust as new data points come in. What do you think the market is getting wrong right now?
Well, so I think that the market right now is not spending enough time looking at the fiscal debt. And the fiscal debt is something that could have a moment of reckoning. And so we've seen market volatility off of the carry trade, but could you get another test on the market volatility off of the fiscal debt? Because we have not seen, whether it is from Harris or Trump, a real strategy that addresses the fiscal debt. Both of this points to just higher fiscal spending, and that brings up concerns about just Treasury demand. And whether we're going to see just a strategy that looks at the debt dynamics and the fiscal numbers.
But so what would that look like? Like a failed auction or something, just volatility because of investor anxiousness?
Yeah, I think the volatility because of investor anxiousness. But I think that's really probably more of a test in 2025 because what the U.S. had done was issue a lot of 5-year treasuries in 2020 during the pandemic. And that becomes more of an issue when you get to the second half of next year. And you have to raise coupons and the auctions.
Joyce, thank you so much. As always, Joyce Chang, Chair of Global Research at JP Morgan, stays with us in just a moment. This is Bloomberg. Welcome back, everyone. Still with us, Joyce Chang, Chair of Global Research at JP Morgan. Joyce, I love this. We have half an hour going around the world. Yeah. So we talked about BOJ, we talked a little bit about China, we talked about the U.S. and the Fed at length, and we touched on emerging markets. We're sitting here in London, in the UK. We have a big, of course, the budget is October 30th. I mean, how do you see the UK as an investment opportunity, but also what the BOE does?
I think that investors feel like a lot of the extremes are off the table that we had to look at in the UK, but it all comes back to the fiscal constraints. I mean, are the fiscal constraints such that you really don't have that much room to maneuver? And there's a lot of concern just on some of the basic services. NHS, basic infrastructure as well that have built up over the last couple of years. So I think there's relief that you're not going to see some of the extremes that we saw, previously. But how much of the fiscal constraint is really going to, prevent the ability to undertake, more reforms to really bring in, structural improvements to infrastructure.
Joyce, talk to me also about, global commodities. So we have some 5 key charts that we're watching this week. But if you look at gold, of course, it has had quite a lot of records.
Yes.
If you look at the oil price, it's fallen quite a lot. So how do you match the two?
Yeah, so I mean, I think the fall in oil prices, it's not about demand, it's really about supply. And a lot of questions about, do you have non-OPEC producers who come into the market? OPEC itself seems to be searching for the price where the market will settle. Now, when we look at our models, we think that oil is actually about $10 below fair value. But when we look into 2025, I mean, we're looking at mid-60s for where oil will settle. And that comes back to the supply side of the equation more than the demand side, that you have a lot of production that seems like it could come online. And I think a lot of emerging markets, have been suffering because of this. We had also seen that China had increased its commodity imports by 15%, and that's tapered off over the last couple of months. So that has had knock-on effects on emerging markets.
And when you look at gold, I mean, I guess bullion's record-setting ways are giving investors a lot to talk about.
Well, I think there is still this desire for dollar diversification. Okay. It's coming from emerging market central banks and also from consumers. And so I think that gold just is, separately has its own dynamics that are driving it away from the rest of the commodity complex.
I mean, one thing, and actually it's a fact that I was told 2 weeks ago, which I didn't know, is that China imports more high-tech chips than it does oil, which seems like a pretty interesting fact. Any thoughts on the chips complex and how that gets redrawn through trade?
Well, I think that there is still a lot of focus on what will happen with tariffs, but even what will happen before the elections. Are we going to see that even in this administration, a last wave of measures that come in through executive orders like the tariff announcements that we have seen that could actually affect the chips market? So I think that irrespective of whether it is Harris or whether it's Biden, you're going to continue to see, a combination of executive orders that don't need to go through the Congress, and then when the Congress does come back, next year, are you going to see further action that's going to be taken? So I think that question is just going to remain, on the table. And China, for what their strategy is, which is very focused on the innovation sectors and increasing the investment, it's not surprising that that's where the imports are also coming in.
Joyce, thank you so much, as always, for joining us. Joyce Chang, there, Chair of Global Research at JP Morgan Securities. Coming up, we speak to the Chief Executive of Air Baltic as a Latvian carrier prepares to go public. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Another shock development in a dramatic U.S. presidential campaign as the FBI investigates a second apparent assassination attempt on Donald Trump. The Fed will begin a crucial pivot this week, cutting rates for the first time in more than 4 years as it seeks a rare soft landing for the U.S. economy. And the Fed decision sets off a 36-hour monetary roller coaster ending with the BOJ on Friday. Meanwhile, the yen strengthens beyond $140 for the first time in over a year. Now, let's talk airlines. And Bloomberg understands that Lufthansa is considering taking a stake in Air Baltic ahead of a planned IPO by the Latvian state-owned carrier. Now, it follows a tricky year for Air Baltic with challenges including engine issues, controversy over government aid, and a bond sale with high interest rates. We'll discuss all of this, opportunities ahead as well, with the company's chief executive, Martin Gauss. Martin, thank you so much for joining us. I mean, this is an exciting period when you look at a possible IPO and kind of some of the process. Where are you in that process? How quickly could that come?
We're in the pre-IPO preparation, and that makes it so difficult. I would wish to be able to say more, but for that we have to announce the IPO, which we haven't done yet. Expectation is it can earliest happen second half of this year or in 25, but on the details of the IPO we cannot talk yet.
I mean, what are you hearing from potential investors? What are they asking? What are they excited about? What kind of things are you hearing behind the scenes?
Again, difficult to say, but what we can say feedback-wise is they like this story because it's the first European airline IPO after Wizz Air 10 years ago. And the story, Air Baltic, is a complete new story, a complete new aircraft. We can double in size in the next 5 years on the order book. So the story is interesting, but we can't give details yet what investors say.
So, but if there's an IPO, it could basically lead to more aircraft purchases, right?
We have ordered them. So we have already an order up to 100 aircraft, which is the story itself, doubling in size now. The concept is proven. We show that on the financials. But the IPO would, of course, enable us to get equity to execute that growth and go forward.
What can you tell us about Lufthansa and the fact that, we report that it's considered taking a stake in your company?
As you would expect, we confirm that there is pre-IPO investor discussions going on, but we can't comment on the details of that discussion.
I think Lufthansa has just extended the wet lease partnership with Air Baltic. So it's a good partnership.
That we confirm. That is a very good partnership where we have now a 3-year contract for even more aircraft flying for Lufthansa Group. And of course, that shows also that we have established ourselves not only as a scheduled airline, but also as a premium wet lease provider. And that is the unique story which we do not have yet in Europe in the airline world.
So, I mean, it's a good partnership. So it could show a prelude to something more between Lufthansa and yourselves.
Again, it's a very good partnership, which we like. And I think both sides said that. And we continue saying that, but we cannot comment on any other discussions we have.
Martin, could you talk to me a little bit about the fact that Air Baltic has been impacted by this Pratt & Whitney engine issue? Like, where are you on that? And when do you see this being over?
We give guidance that we still have the impact of missing engines. That's the biggest issue. The engine itself works very well, missing engine, and for the next 1 to 2 years that will be still an issue. I think we see that. The engine itself is improving as we go. We have been the launch operator on that engine, on the aircraft. But yes, we see these issues with Pratt & Whitney, but I think we are in control of it 1 to 2 years, and then the shortage of engines should be over. That's the moment when we will not have that in the public. That doesn't mean the engine is then lasting longer, but sufficient spare engines will not ground aircraft.
I mean, it's amazing. I was looking at some of the statistics on Air Baltic. You operate one of Europe's youngest fleets, consisting of the largest numbers of Airbus A220s. How does the fleet change over years? In 4 or 5 years, to have visibility of narrow bodies, or how will fly differently?
Concept for Air Baltic is launch operator of the Airbus A220-300, today largest order book, with doubling in size in the next 5 years to 100 aircraft. So we've been very successful transitioning to just one aircraft type. That made our model, and we stick with that. So we do not intend to change the aircraft type, but we take a lot of deliveries, being the largest operator of that type worldwide.
I mean, leaving the IPO to one side, because I understand you're limited in what you can say, but what's your biggest challenge in terms of, it can be, jet fuel prices, it's actually the orders, making sure that you price the tickets in the right. Is it a bit of a juggling act, or is there something that you think investors are underestimating?
Actually, investors like us at the moment, we have a bond out there which is trading very well, and that is, I think, a result of the half-year results which we published, which were, again, record high, EBITDA, revenue, passenger numbers. So we look positive into the future. Again, it's a very different concept to what we see from competition, especially low-cost competition, and I think we found the right niche with a 150-seater, latest generation aircraft, benefiting from, if there's a high fuel price, from low fuel burn. The flexibility of a full-service business class and a low-cost economy. We have a lot of positive things around Air Baltic, which now seem to play out for us very well.
I mean, if you're doubling, you said you want to double actually in the next 5 years.
Yes.
That's huge. Is there a difficulty in finding the right slots, or is it more routes, or just more frequent routes that you already have?
We come from a small base, having around 50 aircraft now. To double in size means we go to 100. That is for others nothing special. We have demonstrated in the last years, coming out of COVID and having a war impact next door, to become the largest Baltic carrier. With that growth we demonstrated, we feel confident that we will double in size in the next 5 years.
Are you still expecting consolidation within the European airline industry?
Yes, we ourselves are a consolidator in our region, because they're all airlines which existed, I think 4 in my time already in the 2 neighboring states, are not there anymore. Air Baltic owns the market today, and we expand to the Nordics. And consolidation driven by the large airlines in Europe is going on. And as airlines are not reporting good numbers, that normally speeds up consolidation. Yes, I do see that happening. For ourselves, we're also part of it, as we have in the Baltics consolidated and the largest carrier in the Baltic states now.
And Martin, overall, how are people traveling differently? Is it mainly for business, or less business, that's since COVID, but more frequent trips for travel and leisure? And how do you see that changing actually in the next 4 to 5 years?
Corporates is the biggest impact, where the business travel as it used to be before COVID is not there anymore. Individual business travel is coming back. And what you see more today is that people fly more often per year. So we see stronger booking numbers going forward than ever before. That means more passengers, but more driven for leisure reasons, for visiting friends and family. The corporate business travel on short haul is still reduced compared to 2019. Okay,
thank you so much for joining us. Are you a coffee drinker?
Yes.
I have bad news for you, because Arabica coffee prices, we have some breaking news on Bloomberg. Martin, thank you so much. Martin Gausler, Chief Executive of Air Baltic. But Arabica coffee futures, this is the highest, most premium cup of coffee that you can get. Those futures hitting a highest since 2011, and this is mainly on supply worries. Now, we have seen that rally. I'm a big coffee drinker, as all of our viewers know, so I do keep a very close eye on this. But the rally in the price has been gathering pace from ongoing concerns about harsh weather in one of the top producers, and that's Brazil. The nation, I understand, is actually wrapping up its harvest for 2024-2025, and production prospects have seemed to be weakening. So there you go. Your cup of joe, your cup of coffee is set to get even pricier, as there's these persistently supply disruptions are pushing the cost for the premium Arabica beans to the highest in 13 years. Coming up, after a second apparent assassination attempt on former President Donald Trump, we'll bring you the details and discuss the race for the White House. That's next, and this is Bloomberg. Welcome back, everyone. Now, asking prices for UK houses increased at double their long-term average pace in September. Now, property site Rightmove says the average price of homes coming to the market rose 0.8% to just over £370,000. Now, the jump comes as a sign of new optimism by home sellers in the wake of the Bank of England's first interest rate cut in more than 4 years. So let's bring in Sean Stepek, author of Bloomberg's Money Distilled newsletter. He's also the person that you call if you're buying a house, selling a house, or need a new mortgage. No, I'm kidding. You don't give out financial advice, but you understand the markets, John, better than most. I mean, what does it tell us? Is there confidence? Is it really the BOE rate cuts, or, you know?
Yeah, I mean, I think it's basically the BOE rate cut combined. Or sorry, actually, it's not the rate cut so much as the fact that mortgage rates have already anticipated the rate cuts. So if you go now and try and get a mortgage from a mortgage broker, you will be getting basically the best sort of price that you've had in about 2 years or so. It's still a lot more than it was 3 years ago, but now you can get like a 5-year fix for just under 4%, whereas you were talking about 6% right in the wake of October 2022. So buying conditions have got easier. Banks are competing quite hard for mortgage business. They're quite keen to write new loans. And I think that's basically what's driving it. Because ultimately, again, it's always about the price of credit when it comes to houses. Yeah. You know, the more that a given monthly payment will allow you to borrow, the more you can pay for a house.
But, John, so you speak to a lot of investors or residents in the UK, and they say, look, let's see what's in that budget, October 30th. Do we know what Labour's intentions with homeowners is, apart from the fact that they need to increase supply if they're going to deliver on their promises?
Yeah, I mean, the good thing is they are focusing on the supply side. You know, there is no doubt that although pricing in the short term is definitely driven by the supply of credit, yeah. It's very obvious that house prices are incredibly interest rate sensitive, but they are also sensitive to supply. And there are definitely lots of areas of the UK where there aren't enough houses and we need to build more somehow. You can argue about how to do that, but certainly it's good that Labour's focused on that. As far as the budget goes, it'll be interesting to see. It's not... I mean, the capital gains tax obviously is one element, but that is something you'd normally expect to affect landlords rather than residents. I mean, you know, there are some outside things that the Labour Party could do. Council tax reform is one. Council tax reform would be a very, very big move and obviously politically controversial, but it is one way that they could shift towards having, I guess, an actual wealth tax in the UK that's based on property. I mean, the idea, I suppose, with a council tax reform is rather than the current system, you'd kind of rewrite the whole thing so it was basically a kind of small tax on the value of your home or something similar to that. That, I think, would be contentious, but at the same time, it's the start of a 5-year term, so it's possible they could go with that. Other than that, maybe a stamp duty holiday, but that would just kind of boost the demand side, which is kind of pointless.
OK, so we'll see. We'll get you back on many, many times before that October 30th budget. John, thank you so much. John Stepek, author of the Money Distilled newsletter. Now, also making news, Shanghai has been hit by the biggest typhoon in more than 7 decades, bringing gale force winds and heavy rain to the eastern seaboard and disrupting holidaymakers at the start of a national holiday. China's financial capital initiated an emergency response on Sunday, closing ports, bridges and highways. Now, all flights in and out of the city's 2 airports were cancelled in the evening. And Russia has reportedly shared or is reportedly sharing secret information and technology with Iran that could bring it closer to being able to build nuclear weapons. Now, Western officials believe it's an exchange for Tehran providing Moscow with ballistic missiles for its war in Ukraine. The UK and the US describe it as worrying and an escalation of Russia and Iran's military ties. Now, one of the most dramatic presidential campaigns has been dealt another shocking development. Members of the Secret Service has foiled the second assassination attempt in as many months on former President Donald Trump. Well, joining us now is Tina Fordham, geopolitical strategist and advisor at Fordham Global Foresight. Tina, as always, thank you so much for joining us. I mean, it's really unbelievable. This is the second assassination attempt, we understand, in 2 months. What does it point to? Division within American society, or even something more sinister?
I've been following U.S. elections. This is the 5th one that I've covered professionally in my career, and I don't think we've ever seen such a febrile political environment. As it happens, I worked on a note last night about nightmare scenarios and surprises as the news broke of the second assassination attempt. And what I think is that we should be prepared for even more of these dramatic kinds of surprises. We talk about October surprises in U.S. elections. We've already had major developments. This is not a binary outcome kind of a race where, Democrat or Republican and life resumes as normal afterward.
But so what does it change apart from kind of realization that it's just unbelievable that this is happening? Does it change the polls? Does it change the way they campaign?
So the even more dramatic assassination attempt against former President Trump back in July didn't really move the polls. In fact, it barely touched the sides. Now, remember, in the immediate aftermath, many political commentators said, that's it, they should just inaugurate Trump now. Trump's ratings have since deteriorated slightly, still quite close. And I doubt that this foiled attempt last night will have any impact, apart from keeping that, kind of political fever on a high boil.
Yeah, this was not at a rally. This was on a golf course.
At his golf course.
At his golf course. Does it change the way he campaigns, or does it change his behavior?
Listen, the Secret Service already increased its protection, and they foiled this attempt. Apparently, the barrel of the gun was sticking out of a hedge at Trump's golf course. He's got Secret Servicemen who accompany him on the course. In addition to what appear to be, both of these suspects, white male, middle-aged American men, there are also international enemies who would like to see Donald Trump out of this race. Iran has been pointed to. But again, does this help us get closer to the issues? No. The Sunday talk shows in America were all about the pet eating story, bizarrely.
But so, again, this is such a strange campaign because, immigration is kind of at the forefront with the economy. And there's so many non-truths being said about immigration. They have to convince, 300,000 people at the end of the day, and that's what will make a big difference. So is it really on knife edge, or are you going to have more tools to also help the markets understand who's likely to be president closer to November 5th?
I think that we're going to see even more misinformation, disinformation, distractions. The weekend full of the pet eating and Taylor Swift. Donald Trump saying on Truth Social, I hate Taylor Swift. Now, again, I'm a professional political analyst. I talk to investors. This should be a sideshow, but it's actually the centerpiece at the moment. And the idea that the Trump campaign is playing, three-dimensional chess, I think is not correct, because I don't believe this is helping them in the polls or with the audience they need to win over, which is independence.
So does he need to change campaigning? And again, I saw that.
Can he change?
Who does he listen to?
Again, I feel like this is stuff that's, beneath us having the conversation. But another big story breaking over the weekend was his relationship with Laura Loomer, who is a conspiracy theorist and worse. And news coming out of the campaign that she is one of President Trump's close advisors is worrying, more mainstream establishment Republicans. I don't see this race moving towards the substance that markets want.
Yeah.
Obviously, with the FOMC decision tomorrow, there'll be, a lot of focus on that, but more gyrations. And I think, choppy news and wild developments.
How does the Harris-Walz camp actually behave in the next couple of days?
Well, who was it who said never interrupt your enemy when they're making a mistake? J.D. Vance doubling down on the pet story and then saying, if I have to, quote, create stories to get the message out, it's hard to really top that. So they are doing some pretty first-rate trolling in their comms, the Harris campaign. October 1st is the debate, the vice presidential debate between between Tim Walz and J.D. Vance. Debates don't usually matter. Vice presidential candidates don't usually matter. They can't help at the margins, but we're at a race where it is on a knife edge and the margins really matter.
So all eyes on that political debate, and from now until then, who knows what happens. Tina, thank you so much for joining us. Tina Fordham, geopolitical strategist and advisor at Fordham Global Foresight. Coming up, more on what to expect as markets gear up for a major week for central bank decisions. That's next, and this is Bloomberg. Well, traders bracing for a busy week for central banks with decision from the Fed, the Bank of England, and the Bank of Japan. Let's bring in Paul Dobson, our executive editor for Asia Markets. Paul, I mean, I've taken too many bets, far more than I wished on, these Fed rate cut wagers. Does it really change dollar dynamics and the way forward for a lot of the currencies?
It's a really good question. I think that the market has been running from one side of the ship to the other quite aggressively over the past couple of weeks. We almost ruled out the possibility of there being a 50 basis point cut, 25 pretty much nailed on by the middle of last week. And now we're back to getting very excited about the possibility of a 50 basis point cut. And then how much more aggressive can the Fed be after that, which is why the dollar is weakening, right across the board at the moment, with currencies like the yen really in the ascendancy and gold powering higher as well. And fueling that kind of real demand for risk that we're seeing at the start of this week as well. So I think if the Fed doesn't deliver on those cuts, then the market's going to be disappointed. But the challenge is, can they also keep the people and those concerns about the US economy under wraps if they are going with more aggressive cuts? Will they be able to avoid spooking people and undermining some of the excitement that the market is expressing at the start of this week?
Yeah, and Paul, so we have the Fed, but then what about the BOJ? I mean, last time it was like a mess. They roiled, global markets. What are you expecting this week?
Yeah, I think that the BOJ may be a slightly underappreciated risk because everybody is so focused on the Fed at the moment. But, the market is pretty confident that we won't see any more action from the BOJ until December or even later. Economists are saying December would be the next hike by the BOJ. If they make any noises about the possibility of moving sooner than that, that might really rattle the market, see the yen appreciate again, and maybe we get to see some of those little ripples that we saw as a result of carry trades being blown up like we had 6 or so weeks ago. A lot of that has been unwound already, but there's probably still some risks out there if we do see a sharp appreciation of the yen from these current levels, having broken through that 140 against the dollar mark earlier today.
Okay, Paul, thank you so much. As always, Paul Dobson, our executive editor for Asia Markets. And of course, in Asia, we also had the string of poor Chinese data that's playing into the markets, leaving traders wondering if authorities would maybe initiate some more forceful stimulus. Up next, Bloomberg Brief, Danny Berger and Manus Cranney in New York. And this is Bloomberg.